Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup breaking news edition, 5:30 p.m. Eastern Time here on the East Coast in New York City. Brill and Quaranta here with my amazing co-hosts David Brill and Josh Klayman, and our very special guests Aaron Cummings and Jim Flood. Before we begin, there's so much to talk about. For everyone in the audience, thank you so much for joining us on LinkedIn Live, on X, on YouTube as well. If you've got questions for our panelists, please do put them in the chat. We will address them as quickly as we can. Before we begin, our usual disclaimers. Please keep in mind that everything discussed is our own personal opinions, doesn't necessarily represent the opinions of our collective firms, and obviously nothing discussed is accounting, investment, legal, or tax advice, especially when I say it. With that, I am going to stop talking for a minute. I do want to give Aaron and Jim an opportunity to just say hello. Aaron, Jim, please say hello to the audience. Welcome to the show.
Well, great to meet you all. My name is Aaron Cummings. With Jim, we are the co-leaders of the Government Affairs Group at the law firm of Brill and Quaranta, but just thrilled to be with you. My background is I spent some time in the Senate, worked for Senator Grassley and at the Bush White House, but just excited to talk about a big day.
A big day indeed.
Amen.
Jim, please say hello, everybody.
Amen. Hello, everyone, and thank you. My name is Jim Flood. I am also a co-chair of our Government Affairs Group, and I had the great pleasure of working for Senator Chuck Schumer for a number of years, and I've been working in Washington for about the last 25 years, and it's a pleasure to be here. Thank you for the invitation.
Jim, Aaron, good to see you both. David, let me start with you. The Bentley plows down Park Avenue. I just wanted to start with, as you got on the airplane this morning and they handed you your usual Tanqueray and tonic, did you expect we'd be talking about Chair Gensler's resignation statement?
Well, you know, Brian, I had thought, and we've talked about this on the roundup, that we would see Chair Gensler resigning. It was a matter of when, and I had surmised that maybe it would be quietly in that last week between Christmas and New Year's, but I think he decided not to do that and to be more out in the open about it and announce it today and making it effective Jan 20 at the date of the inauguration.
Yeah,
I do see some irony in that his day he resigned, the SEC lost a fairly important case on the definition of broker. And I know Josh is going to go into that more, but I did see some symmetry and the judicial process and his process and how they both came to an end today.
David, thanks so much. Josh, please weigh in on this. For everyone in the audience and for Aaron and Jim who may not know, you haven't lived until you've got text messages from Josh or David saying either, do you see the prices, or SEC lost a case, this is really big. Josh, what happened today for the audience?
So what didn't happen today? I have to say, as I was taking care of some things right before now, outside there was a rainbow, which was great, but it seemed so odd to me that everyone was walking around not realizing what a big day this was for crypto. Right? So we saw, as David was alluding to, we saw a number of things. One of them, I think we'll get into, which is about Gary Gensler's announcing his stepping down. Another is a federal court in Texas striking down the dealer rule on grounds that the SEC exceeded its statutory authority. That was a case that the Blockchain Association and the Crypto Freedom Alliance of Texas had brought in a federal court in Texas, and where the court vacated the entire rule, which it was required to, because the court had ruled that the SEC had exceeded its statutory authority. Excuse me. One of the things from the crypto space that was key was that the proposed rule would have blurred the lines between a dealer and a person trading, right? And would have potentially brought in DeFi. Some other just quick things that I'm sure we'll touch upon. One is, you may have seen the CFPB issued its final larger participant rule and fully excluded crypto.
Yep.
Which was great, and a huge win. And also that Trump media, I don't know if you guys saw this, it allegedly filed, at least it was reported on Twitter, for TruthFi as a trademark, and reportedly intends to offer digital wallets, payments, and crypto services. This we've heard along with rumors that Trump's social media company is in talks to buy Bakkt. So anyway, let me pause there. There's so much more to cover too, but those are just some headlines.
Josh, thanks so much. Aaron, let me pull you into this. I want to go back to some of the things that Josh had alluded to a bit earlier. And as the non-lawyer on this broadcast, I'm just the dummy who makes sure the lights keep working. I had read Chair Gensler's, the SEC statement about Chair Gensler's proposed targeted resignation on Inauguration Day. And forgive me, but it read almost as a kind of a cheerleader statement about all the great things he did. Is that usual? And were you surprised by the news about his resignation planned for Inauguration Day?
Well, it's a great question. No, I wasn't surprised because this is traditional. I mean, usually when there's a changeover in administration, the president gets to pick the chair. Generally, if you've been chair, you don't want to just stay on the commission in a different role. And so a lot of people suspected that this would be what Gensler decided to do. But look, it's big news for the crypto community. I mean, Captain Ahab is going home without his white whale, having suffered a loss. I mean, now he's going to go lick his wounds, and then President Trump is going to get to pick his people. And by every indication, it looks like he's going to be able to stack the deck. He's going to be able to have 3 commissioners who are very pro crypto.
Aaron, thanks so much. Jim, do me a favor, from the mechanics of it, it's always been a struggle for me to understand it. And as I understood the news, Chair Gensler couldn't be fired per se, for those who may not know in the audience, but he could have been demoted, correct? I mean, I understand the precedent of resigning, but again, what were your perspectives when you saw the news?
Yes, I was not surprised. I mean, you can technically state you're at its most simple, you're an employee of the SEC, whether you're the commissioner or not. I mean, one can technically stay. You see senior career people sometimes who will go into the front office, let's say, and you see this at the SEC as well. They'll be the chief counsel or counselor to a commissioner, and then the commissioner will leave, or there'll be a new administration, and then they'll go back to one of the divisions and go back to be essentially a practicing lawyer. Obviously, Chair Gensler is at a higher level than that, has more gravitas than that, has lots of other opportunities, career opportunities prospectively. So I'm not surprised at all. The logical move is to do what he did.
Jim, Aaron, thank you both so much. David, let's pivot back to something that we talked about a bit earlier. And Jim and Aaron, as new guests, it's great to have you both. David and Josh often educate me on the mechanics of some of the things we see coming out of the courts. And Josh, you mentioned the Texas judge overturning the dealer rule. Can you and David plow into that a little bit more? And certainly Jim and Aaron weigh in there, because I think many in the industry didn't realize the importance of that. Josh, could you start us off with why was it so important? How did it wrap up crypto platforms, for example, or brokers into that issue? You're on mute.
Thanks.
This is what we get for doing a podcast, a live stream, Jim, at happy hour.
Exactly. And this is very happy hour. What I would say is, as I mentioned, one of the big concerns was that users, traders trading for their own account who traditionally had not been treated as dealers, right? That they could be wrapped up in the definition. And in addition to the Blockchain Association and the Crypto Freedom Alliance of Texas's case, there were other folks, including I believe it's the Mutual Fund Association, right? Who were very unhappy with this as well, saying that this goes beyond the logical extension rule, right? This violates the logical extension principle under the Administrative Procedures Act, right? At saying that without having full and fair time for the public to debate this, right, and to provide feedback, that this was a violation of the APA. Now, the judge said that the judge didn't actually have to go far enough to say whether there was arbitrary and capriciousness under the APA, because the SEC, in his view, had exceeded its statutory authority. And that means, as the judge recounted in the opinion, that actually it's not that the rule may be set aside, it's that it must be set aside. And so that's what happened. I think as part of a larger view, if we think about the demise of Chevron deference this year, right, and this increasing focus on limiting agencies' abilities to interpret or extend their statutory authority, right, along with some of the fights that the SEC has been the subject of, relating to the major questions doctrine, which really goes hand in hand with Chevron deference, right? I think this is going to be the first, or maybe not the first, but among the series of dominoes that falls. We saw the simultaneous result of Nick. I'm his last name is escaping me. But he posted on LinkedIn as well that there was a simultaneous ruling today by the same judge on the same issue for different parties.
Yep.
So I think we're going to see one after the other. And I think this bodes well also for cases that are otherwise brought in the Fifth Circuit, including, I believe, Jason Gottlieb's case. The Song a Day case is also brought in a different court in a different state, but in the same federal circuit.
Shout out to our legal working group colleague, Jason Gottlieb. Aaron, weigh in on something that I was hoping to get your perspective on. Again, as a non-attorney, I have colleagues, I come out of financial services, as you know, in private markets, in hedge funds, and we often have this conversation, and it's often been, oh my God, the SEC has been terrible for crypto. And I've had hedge fund colleagues who say, you got to see what they're trying to do to our industry. And, let me ask the question that might be a bit more too impolite, but has this been a more overly aggressive SEC than you might have seen in the past? And I know it's a bit of a provocative kind of add-on. I'm thinking, Josh, you and I've talked about it many times, the debt box case, for example. Why does that happen from a regulatory perspective? And how do you anticipate that changing? Aaron, I'd love you to lead that off. And Jim, if you could weigh in on that as well, that'd be great.
Well, sure. Well, I think it's important to kind of go back and look at, when Gensler came in, he was clearly kind of an activist head of the SEC. I mean, he had an ambitious agenda. He wanted to make a splash. And he also wanted to kind of compete jurisdictionally about regulating crypto. Obviously, there's been kind of, jarring for position amongst the SEC so he was trying to take control of the issue, I think, instead of leading it up to where I think it belongs, the CFTC. And so I think he was trying to play the hand that he was dealt in the most aggressive way that he could, and it's clear that he didn't care much for crypto and didn't and was, I think a lot of his efforts were designed to kind of just crush it in its infancy and to really restrict it. And so now what we're going to see with President Trump's approach, and that includes the positions of the SEC commissioners who are already there, is a much more open-minded approach. And so I think this is really going to be a game changer. And another significant part of that is that the SEC has a number of investigations and lawsuits, and with the flip of control, I think that's another significant thing that's happening here is that I think we're going to see the SEC. I mean, certainly they're still going to enforce all of the existing laws and regulations, but I think there's going to be a much more of an opportunity for companies, to the extent there are problems, to have constructive conversations with the SEC, and instead of just having them act so aggressively and go after people at their homes and businesses.
Aaron, thanks so much. Jim, weigh in on this, and the question I'll ask you is: will people actually be able to go in and register in the new administration?
Oh, I won't. I can't go that far out on a LeBron. But what I would say to you is, I think I'm not surprised at all by what Chairman Gensler did. I mean, I think he's never been afraid to get out front. And mind you, some of this is a little bit about the values. You have to marry up the values of the political parties with the financial markets. The Democrats are always worried about protecting consumers. They drive the car at 55 miles an hour, 60 miles an hour. The Republicans are more willing to go 70 or 80 miles an hour in the interest of growing the economy, growing a new sector, getting out there. And I think that ties into what Aaron just said. I think there was a lot of skepticism in the Biden administration with Chairman Gensler, et cetera. When does this all become real to them? When are you really past the tipping point? And also a thought process that, we really need to get out there and think about regulating this even more aggressively. I think the marketplace was like, at some point, we want regulation if there are going to be fair rules of the road, but not regulation where you just decide these are your ideological values, which are not consistent with growth in the industry, and you get out there and just impose those. And I think that's what you saw.
Jim, thanks. Josh, I want to kick it back to you. And David, welcome back. You're now at the compound ensconced somewhere on Billionaires Row in New York City. But Josh, one of the things we often talk about, and we have colleagues that may not understand the litigation aspects of this. We've got amazing litigators in the working group. It's not like a new SEC chair steps in on January 20th and says, all these cases go away. It doesn't procedurally work that way. Josh, am I wrong in that? And Aaron, Jim, certainly, correct my lack of knowledge from a litigation perspective. There's no wand waving that makes all of this go away, correct?
So, Ron, that's my understanding. As everyone knows, I'm not a litigator. Certainly some of our litigation friends, and I don't know whether Aaron or Jim, either of them are litigators, but what I know David's not.
I could talk.
He might play one on TV. Yeah, I think one of the concerns that's definitely been raised, though, is whether, what will happen with plaintiffs' lawyers, right? Because they may not be following the same strategic playbook as a new SEC head and a new SEC agenda, and they may not have
cases.
Yes, exactly. Yeah. Exactly. And so let me turn it over to David if you'd like to chat about that.
Sure. And then I welcome our guests to add on to what I have to say. So when referring to the existing cases and what may happen with those existing cases, the new commissioner of the SEC can in and of himself take an action to either resolve or settle the case. It has to be done with the full set of commissioners. So it'll require that a new chairman be named, that the Republicans will replace the one seat that they'd be missing, because it would be, well, it actually depends. If we name a new chairman, we'll have Uyeda and Pierce and the new chairperson. So then we'll have 3 Republicans, and then I think they'll have to decide on a Democratic nominee because they'll need a 5th seat. And then the full commissioners would vote to whether to continue the litigation, settle the litigation, or take some other action. I'm intentionally choosing not keep bringing the action as one of the choices. I may not have said that perfectly eloquently, so Jim and Aaron, if you want to add to that, feel free.
Yeah, well, I think you've described that pretty well. There's going to be kind of an interim period where all the pieces, kind of as you say, David, everything needs to be set up, and once everybody's in place, then actions can move forward, decisions can be made, and then that's when the crypto community is really going to start to see a sea change in terms of how the SEC acts with respect to the crypto community. And so the way this will work is that Gensler will continue in his position, and he said that he's not going to resign basically until Inauguration Day. Once Inauguration Day happens, then President Trump will make his nomination. And one thing that I think we've seen with the Trump transition is, this isn't 2016 where they kind of were new to the game and some of the nominations came out slowly. They've been thinking about this for a long time. They've been thinking about it for years. They've had an administration in waiting in the form of, the American First Policy Institute and some other organizations that have been helpful to them. And so they're ready to go. And so I would expect that President Trump will announce his nomination in the wake of this news, fairly quickly. And we should have some good insights into exactly, who he's going to pick. Many people have been speculating about who that will be. Teresa Guillen often is mentioned, and I think she'd be great. But once the pick is made, there's still a transition. And so Trump can name kind of an acting chair to the SEC. Presumably that'd be one of the 2 Republicans who are on the amongst the commissioners now, who are both generally pro crypto. So that would be fine. And then she would need to go through a confirmation hearing. And that can sometimes take a while to kind of percolate through the Senate. But I think we could expect, sometime in probably February, or it could extend into March. We should have a full SEC and ready to go, and that's when we'll see a sea change.
Jim, are Aaron and David correct?
I think so. Although to be frank, I'm a little bit more focused on what's going to happen in Congress next year. I mean, we're going to have a brand new Congress. I mean, there was an enormous amount of effort that went in this year to trying to put together a crypto bill. And obviously the industry participated heavily in the election, and with favorable results, as we all know. I mean, there are at least 8 seats or more. And when you look at a number of the key Senate races, obviously there was a very heavy engagement by the industry and worked out very positively. As we sit here on November 21st, with another 3 weeks left in what we call the lame duck session of Congress, it's looking very unlikely that a bill is going to come together. There have been times during the year, about 2 months ago, it looked like it was much more possible. Now it's not going to. And although obviously what the SEC does is critical, and it'll be focused on this will be a major issue for the commission, as opposed to Congress, which has, thousands of different issues. I think there's momentum in Congress next year, which has obviously been a debate for a long time. But I think there's a momentum to get involved here and potentially try to cut a deal on a crypto bill next year.
Jim, thanks so much. I want to throw a couple of things out there, and I want to pull Josh into it, who wisely put it in the private chat to me. And I want to mention a phrase, Josh, that you and I, a word we haven't used in too long, FinHub. And how do you anticipate our engagement, the industry's engagement with FinHub change? And, the early conversations we had on things like, dare I say it, safe harbors. Do you anticipate that also kind of picking up steam?
So that's my hope. I mean, I have to say, I distinguish in my mind between Gary Gensler and FinHub. FinHub being led by Val Spanik. Yep. I think, as you guys all know, certainly previously, very productive conversations, very productive work has been done with FinHub, in my view. And I think it's very fortunate how knowledgeable that group is about digital assets and increasingly about AI, which has become a bigger focus of theirs. I do think certainly their hands may have been tied, in my view. This is not any inside information, but just because of Gary Gensler's very strong views. And it's been described, and certainly others on this webcast may know better than I, but my impression is that at the SEC, back when Jay Clayton was chair, he was very much a man of the people and listened to ideas and really tried to take, a ground up approach, right? Whereas Gary Gensler was very, as I understand it, or has been, quite top down, right? I think what that means is that to the extent that Gary Gensler would have gotten glory, the glory is his. To the extent that he would not have gotten glory, the not glory also is his. So I remain optimistic about FinHub and what this means for productive conversations.
Josh, thanks. David, go. I know you got a pending question for our guests. You're on mute, buddy. Still on mute.
Sorry, gents. Aaron and Jim, as I think about passing legislation, I do think about the filibuster a little bit. And my question to both of you is, do we think that there are 60 members in the Senate who would support crypto legislation to overcome the filibuster that, maybe Ranking Member Warren would try and filibuster a bill being put forward or being voted on? And my sense is that, the campaign and the advocacy that the crypto industry has done has been both to Republicans and Democrats. But thinking about the Senate in particular, what do you both think about that and issues with the potential filibuster?
David, I think that's a great question. And I think, look, we need to be direct about this. I think if it were brought to the floor right now, independently, it might really struggle to get 60 votes. And there are a lot of reasons for that. I think there are a lot of people, I think of my boss, Senator Chuck Grassley, among them. He's been studying crypto for a while, but he hasn't really, a lot of members in Congress haven't really had to think about it and its implications because it really hasn't been presented to them squarely. And in Congress and certainly in the Senate, a lot of times people won't focus on something until it is right before them. And crypto, let's be honest, I think there's still a lot of people that are getting familiar with it. They don't know that much about it. They've heard a lot about potential concerns. And so there is an education process that still needs to happen for a lot of members. Yep. And so until that happens, I don't think we can safely say that it could get 60 votes. Now, the good news is people know it's coming down the pike. I think Jim mentioned this before, but there have been a lot of discussion about, different crypto or stablecoin bills going through the House and the Senate. Look, is there still a chance something could happen by the end of the year? There's always a chance, but we've had a lot of conversations about this in recent weeks, and we think that the legislation is probably not going to happen by the end of this Congress. But in a way, that's good news, because we have coming into the White House someone who is a champion of crypto and who really wants to make that part of his legislative agenda. Mm-hmm. And to the extent something did come up, I think he would probably oppose it, because he wouldn't want it to happen while he's not there. He wants to be the person that really brings this industry forward. And with the shift in Senate control to Republicans, and I think it's just going to be a more favorable dynamic. And so whatever's done, it's probably going to look more favorable to crypto in a few months than it would be if it came up right now.
Yeah, it would.
Yeah, Jim.
An interesting question is, several months ago, there were when you talk to senior Hill staff involved in the negotiations, they came close. There was close to a deal being put together. And mind you, that's with probably 7, 8, 9 members, like even just in the Senate alone, that have a direct interest here. When you look for, Senator Lummis, Senator Gillibrand, Senator Sinema, others, obviously Senator Schumer as the leader, Congressman McHenry, Congresswoman Waters, et cetera. So Senator Stabenow, there's some of those folks are going away, next year. Obviously, Senator Stabenow is retiring. Congressman McHenry is retiring. So some of the players are off the table. Does that change the dynamic where some people are arguing for a stablecoin bill? Some people are arguing for a more comprehensive bill with less players? Is there a greater probability of compromise? Or is it the case that other members step up and decide, I'm going to make my mark by making this one of my number one issues, and therefore I'm not going to agree to any legislation? It certainly would block what we call a unanimous consent vote on legislation. And it's going to have to go through me as well. I think that is yet to be seen, but I do predict that I think we're going to see crypto pick up more support. The contingency of members who are going to say to leadership, I have a direct interest in this, I think is going to expand. And that always makes it more complicated to get compromise.
Jim, Aaron, thank you both so much. David, we've got a lot of market stuff to cover. Before I do that, I want to throw one more legal, regulatory, and legislative comment out there. And I'm doing this with all deference to our dear guest, Emmert Channing. I'm going to throw this out there for the group, for anyone who wants to take the first shot at it. Will Washington finally define sufficiently decentralized, Josh? Or you could say pass, like the game shows.
So actually, I guess the question is, number one, will sufficiently decentralized even matter? First of all, I think that's an open question. Certainly today, and this is actually something I wanted to mention anyway, you may have seen the CFTC's GMAC today. The Digital Asset Subcommittee presented, in fact, Chris Perkins of CoinFund presented a recommendation about utility token definition, right? For something that would be a token that is a commodity that is not a security, right? As we know currently, potentially there can be overlap, right? And that's one of the things that the market structure bill is the market structure bills have tried to focus on. But I think the question about, these are all constructs that people have tried to put in place prior to a speech. I believe like Hinman's speech, I don't think anyone was thinking specifically in terms of that particular term, right? There were arguments, right? But I think we've all focused on these questions where they're images, they're I don't know, ideals, but they might not make sense as law
or matter. That is for everyone on the broadcast and for everyone in the audience. Thank you so much for joining us. That is Josh's very, very elegant way of saying, stop using those two words. They don't matter. David, let's move forward. And Aaron, Jim, Josh, certainly want to get your perspectives on this. I'm sending this out there for the audience watching us. Again, thank you so much for being with us. If you've got comments or questions, Emma, thanks. Good to see you. Please put it out there. David, I am growing increasingly confident that I will win the great BTC wager. And for Aaron and Jim, who may not know, like normal people who don't need to know the wagers Jim and David and I have, I had wagered that Bitcoin would hit 125 before the end of the year. And for a long time, David was winning that bet and was probably going to get a really nice steak dinner. David, we're at 99. Tell me I'm wrong.
You're wrong.
Now tell me why, my friend.
So, look, I think one of the great things about this bet is that you really, both of us win in this scenario, and Josh too as well, because
Me, I'm
Josh
all
is the
set.
ultimate winner of this bet.
but because ultimately, Josh has no skin in the game. It's between Ron and I, and she just gets to have a steak dinner. But all of that aside, I do think that we will breach 100K in the not so distant future. And I said in a private chat amongst the three of us that it may happen before our podcast tomorrow morning. Look, I think we're seeing a lot of positive momentum, but my current thesis is that we will break through 100. We might break through maybe to 105 or 110, but I do think that we will have a retracement and a sell-off. We've moved really far, really fast, and I think healthy markets do have some, contraction, some consolidation, and so I don't see it being up and to the right all the way to 125K. Or just the more ironic thing, Bron, is if there were a ton of calls just sitting out there at 125,000 that just missed getting targeted by the end of the year.
For our guests, the running joke for David and I is it will hit 125 probably on January 2nd. Yeah. Jim, Aaron, certainly, and Josh, if you want to weigh in. David, I do want to push back on that, and I'd love our guests, and I'd love the audience to tell me where they agree or disagree. Here's where I push back on that, David. You've got the incoming new CEO of Schwab claiming publicly to want to directly offer crypto to clients. Schwab is not a bucket shop. They've got an extensive network, which means others and the wirehouses will want to weigh in on this. We've just seen the launch of BTC ETF options. Now corporates can look at this from the perspective of deep hedging strategies, and it was one of the top 20 non-index options in the market within the first hour. So David, to that point, I see what you're saying from a technical retracement. I get profit taking, aside from your very long call positions, but do you still think that 125 is not possible?
So Ron, and for those of you who like movie memes, I've been sending Ron the incredibly funny one of Jim Carrey where he says, "So you're telling me there's a chance?" And so Ron's been receiving these, fairly frequently. Yeah. So look, Ron, I think, and I posted this on LinkedIn today. There was a Forbes article that I referenced. The wirehouses have not turned these ETFs on to the majority of their customers. And even the wirehouses that have turned them on are doing it in such a way that they can't solicit. So it has to be a customer who is soliciting the broker and asking for information and access to it. I do not see the wirehouses in the next 30 days turning these on in a meaningful way for their clients. Okay. So if we assume it's a Q1 event, a lot of that pent-up demand that you're seeing, Ron, is, and I totally agree with you, by the way, I see as just not getting turned on in time. And then secondarily, there are a lot of wallets in profit. And what I mean is that if people are holding Bitcoin, they may have held it in the 30s, they may have bought some at 50, or they may have bought some at the new high, who are significantly in profit and who may want to take some of that profit off the table. So my suspicion is that there's a fair amount of selling that will be done right around this 100 level, even if we pass it, as people who will take 1 or 2x profits and seek to monetize that.
David, we can continue to agree to disagree until the fateful day on New Year's Eve. That will be my text message to you at midnight on New Year's Day. Aaron, Jim, we often talk about the markets here, but I wanted to get your perspectives on something that's not directly market related, but certainly from the perch that you both have. And Josh, would love you to weigh in on this as well. David, I'm starting to see the word frothy across a lot of different markets. Aaron, Jim, when you look at what's happening in the crypto markets and you see 98,000, 99,000, approaching 100,000, from the legislative experience that you have and from the legal perspective, are you concerned how that is perceived in Washington? I'm going a little bit off script here, but certainly there's the argument about consumer protection, investor protections. Is a market like this too frothy for the Washington establishment?
So look, the Washington establishment is risk averse, and there's no doubt that the valuation of crypto is volatile, right? I mean, it's up and down. There's a lot of movement. But I think part of that is just because it's young, and we would expect any sector to have a lot of volatility. And so one thing that's clear, if I don't want to comment on I'm not going to join your bet of late, although I am definitely in favor of steak dinners. But one thing that is certain is that the environment in crypto is going to get better in a matter of weeks when President Trump takes office. And so there's going to be, I think, more opportunities for the industry, and there's going to be more attention to it. I mean, President Trump, if nothing else, is going to be the promoter in chief, right? We're going to be hearing a lot about crypto. And so I think the whole world is going to take more interest in this, and they're going to take it more seriously because it's being talked about at the highest levels, and he wants to get something done.
Yeah. Aaron, thank you. Jim, from your perspective and your history on the Hill, I could imagine Senator Schumer and the ilk there are a bit concerned about where some of the market's going. Do you agree with that?
Well, I don't speak for Senator Schumer, but speaking for myself, I must say that I think the concern about the regulation is not necessarily tied to the price at the moment. Yeah, does it? The attention that the price gets, basically in the press and in the media, basically elevates the issue and it keeps it in front of the members. But I don't think this is a circumstance, like Standard Oil at the turn of the century, where they were like, oh my God, like there's outrageous behavior. Now we need to act. I think that the need to act, the concern about the need to act has been going on for some time now. And so it's just a question. Sometimes it takes an event. It could be an event. Sometimes it's increased price, but it's more likely to be a major fraud event of some sorts, or the use of crypto and money laundering, for terrorists or something like that. That's going to prompt Congress to say we need to get off the sidelines. Now is when we need to move a regulatory bill and create a regulatory scheme.
Jim, Aaron, thank you both so much. I would invite you to the wager lunch, but Josh and David have exquisite taste, and unfortunately, I can only afford the two of them, and we'll probably have to sell some crypto. I want to reach out to Emma Channing's great question. The question is fairly simple. SAB 120 has got to go. When do the folks on the roundup think it will be dispensed with, and how? Everyone in the digital asset industry, big and small, especially custodians, are punished by it. Really good point, Emma, and we have that conversation frequently. Josh, let me pull you into that as well. We've had way too many text messages about our SAB 121 in the past 2 or 3 years. Does SAB 121 go away? Will a new SEC pull SAB 121?
I fully believe that SAB 121 goes away. I mean, it would have gone away already, but for Biden's veto, right? And we've also seen it be chipped away at because certain high-profile institutions have reportedly been able to get exemptions from it, or interpretations that it didn't apply to certain types of digital assets. I mean, when and how? I tend to believe, although my crystal ball isn't as great as David's nor as Ron's.
No one's as David's.
I believe that what is likely to happen is that the SEC itself potentially would pull it back. I mean, it is accounting guidance. It's not commission guidance. It's a staff accounting bulletin.
Yeah.
And so certainly I think that is something that could be pulled back. Do I think that will happen before Gensler leaves? I don't. But I think that's more just in terms, wanting to end as strong as Gensler can from Gensler's perspective.
Josh, can I push back on that a little bit, and certainly want to open that up to the rest of the panel as well? We did see updates to SAB 121 coming out of the chief accountant's office that allowed for exemptions. I'm probably using the wrong word, and the argument we've often had is, how do you regulate and offer these kind of exclusions by exemption? A lot of person hours have gone into SAB 121 at the SEC. David, Aaron, Jim, am I amiss in thinking that a lot of the folks at the SEC, irregardless of Chair Gensler, may look at this and say, you know what, SAB 121, we put a lot of work into it, and it's there for a reason. Am I wrong, David?
Well, I mean, there are plenty of bills that get passed, that get proposed, that get revised or vetoed, or negative action is taken. Look, we need more custodians in the space. Having really centralized custodians, for having all of that value in 1 or 2 or 3 custodians, no matter how qualified they are, it is just not a good way to conduct business. And I think, rational minds will come together, and I would likely say, look, there's some of this we may want to keep. A lot of this needs to be refreshed or rethought about or reimagined. And I would imagine that we would get a version 2 of this that is more practical, and one that I think has more of a consensus of the industry, and Congress, and then of whomever will be leading the SEC.
Jim, Aaron, I keep trying to find a place where David might be incorrect, and I fail every time. Is he right in this instance?
No, I think David is right. I mean, I guess I would say two things about it. The first is, look, this is a situation where leadership matters, and so a change in leadership in the SEC is really important. Obviously, there's been a lot of feedback about this, and so the SEC has received that. They will, in general, try to refine and revise policies that don't make sense if they have sufficient feedback, and they might do that on their own. And that leads me kind of to my second point, which is that in Washington. And you brought up this point, I think, Ron, there is kind of an institutional inertia. If somebody does something at an institution, they feel like they do it for really good reasons. And they're working in good faith. They're trying to figure out how to solve some problems and address some real concerns. And so I think that does have to be acknowledged. And the SEC is going to want to maintain its position because it arrived to that, with all the good work of its people. So what that means is, my second point is, changes take leadership. They also take engagement from the community. And that's why it's so important for everyone in this community, I think, to keep, to look for opportunities to strategically provide feedback to Congress, to the SEC, to the White House, to everybody who's working in this space. And that sort of dialogue is going to lead to improvements in policy.
Jim, finish up for Aaron. Weigh in on that, please. Thank you, Aaron.
SOB 121, eliminated no, modified yes. I think there wasn't an agreement really on the, there was some disagreement in the commission on that. And I know there are different stakeholders that have different views on that. And it sort of depends. I think this is another issue. As crypto grows and grows and grows, and we move into next year, the question is, do other stakeholders get involved? Do bigger banks get involved? Do other players get involved? They all have major political capital. And if they bring that political capital down here to Washington and come to the table, I think that will be dispositive.
Yeah. Jim, Aaron, thank you both. Shout out to Jay DeSantis, Bitcoin ETF overtakes gold fund. Times are changing. David, I had the privilege of giving a presentation about 3 weeks ago, and something along the lines of, in the time that gold ETFs took 20 years to the level that the Bitcoin ETFs are, it took 10 months to do. I'm probably screwing those numbers up, but there's a lot of money moving into Bitcoin ETFs. David, I want to bring it back to some of the economic stuff, and Josh, you as well. Aaron, Jim, we often joke, Josh has heard more macro from David and I than she ever here, but now loves it, which I'm worried for her. But David, when we look at some of the information that's come out, we had jobless numbers today that I think were slightly off target. I'm probably screwing up the numbers. It's been a busy day. David, am I wrong to anticipate that a December rate cut from the Fed is off the table, given some of the data? And is there a macro impact on crypto?
So no, I don't think you're wrong. And I think one of the things we really have to pay attention to is the dollar keeps getting stronger. And that these rate cuts, when you look in the markets, they don't correspond. Like I just checked the 30 years over 7%. We just had 75 basis points of cuts. So no, I don't think we should be cutting right now. But we do have a broader challenge of, I think inflation is somewhat coming under control. But it's all relative because we're working off of a high bar. So, I don't know how you bring interest rates lower right now because you're working off of a high bar, and also the market is just not in sync with what's been done. The 75 basis points are really like just back in the market as far as what the rates are.
Yeah, David, and to that point, and Josh, I know I have to give you a little bit of time to go back to SAB 121. I just want to wrap up some of the macro. David, to that point, it makes us ask, what are the long yields telling us at 7% plus, which is they don't anticipate that kind of growth in the longer term. Josh, I know you had a SAB 121 comment. I'm sorry if I cut you off, but go.
Oh, yeah. No, didn't cut me off at all. It just occurred to me something, I believe it was Aaron or Jim, one of you mentioned something about big banks and others really throwing their weight behind positions. I actually think, with this new administration and with, the new congressional class, one of the things that I think had been pulling people apart, right, was that in searches for exemptive relief, for example, often, in my experience, there was a divide between, okay, we've got a tokenized traditional security with some sort of redundancy in terms of record keeping. We are not crypto, right? And trying to angle things in that way to say that SAB 121 should not apply. I think now with this new shift, as everyone has discussed, I think maybe there's more of an opportunity to come together and to treat these all as the digital assets that they are, as opposed to breaking out crypto from tokenized securities. Not making crypto securities, let me just say that, but just rather, having a united front.
I will throw out there that some folks have said cryptos are clearly securities, but we can have that conversation over another happy hour, Josh. No, I appreciate that. Jim, Aaron, please weigh in if you want to on Josh's great comment about this. Or not. Fair enough. David, I want to push on one more thing when we talk about the economics of it. I'm sorry, just to go back to the macro stuff.
Yeah.
In my mind, and I think you and I very much agree on this, it's not the data, it's the revisions that always matter. And for some folks who may not know, and Aaron, Jim, I'm sure you do know, but for those watching, thank you so much for being here. David, you and I have seen 100% revisions plus on some of the data going back many, many months. For the audience, why is that important? Why do we need to keep an eye on the revisions, particularly if we're talking about the crypto market?
Well, I think in particular, if the Fed's making decisions and they're data dependent and then they're relying on data that's not great data and that's revised consistently, you're almost making policy off of bad data. And I was actually talking to some folks, and we all know that Elon and Vivek are going to be doing their Doge. I don't know what we call that, an office, a department. But maybe one of the things they can focus on is refining the data that we use and that the Federal Reserve uses to make these determinations. I mean, if anybody can deal with data and refining data and data sources, I would say Elon and Vivek are two people who could do that. Yeah. And that would do a great service, because look, if we are going to be data dependent and we're not going to have great data, it's somewhat foolish to just be looking at numbers that are consistently wrong and then make estimations about whether we should make cuts, in the rates based on those false numbers. And two other things I want to say is that, we've talked about this before. Sometimes it's not just the data of jobless claims, but it's really looking at the anecdotal data of, credit card delinquencies, car loan delinquencies, other things that are affecting people that you do get better data on, that can give you some other indications of what the market, what the markets are doing and what inflation feels like. And the last thing I'll say is that I am hopeful in this new administration that whatever jobless claims or whatever jobs numbers we get in each month are not, 80 or 90% government jobs. Like my strong sense is that pattern is going to stop. If anything, it may go in the opposite direction. But so hopefully with better data and some, more prudent hiring, on a state and federal level, I think we will see better numbers over time. But again, that's a hope of mine that's something Vivek and Alon will get into.
Josh, why didn't I wager with David about the price of Doge? Why did I have to go to Bitcoin as part of all of this? We're approaching a pretty hard stop. Aaron, Jim, thank you both for joining us. Josh, David, dinner is coming up. And as my wife tells me, if I don't have dinner with her, this will literally be my last broadcast. And it's been nice knowing you both. I do want to give everyone an opportunity. Aaron, Jim, if you're comfortable, we often talk about predictions of what we're going to be looking at in the coming weeks. Aaron, let's start with you. What are you anticipating in the coming weeks? What might be some of the predictions you're comfortable sharing?
Sure. Well, I think we're going to see, Trump's pick to replace Gensler in fairly short order. I think he's going to be excited to roll that out. I also think we're going to start to see some trickles of information from the transition team about things that you can expect about crypto. There's been discussion about maybe appointing a crypto czar. That was kind of in the news today. And I think that's super interesting, especially because the White House seems to be setting up a system where they're going to run a lot of policy through the White House, different than the first Trump administration, where they left it to the agencies in many respects. Yeah. And crypto could be a place, given the president's interest, that he's going to want somebody right by his side in the White House just driving advancements in crypto policy. And that could be really interesting to see.
Aaron, thanks so much. Jim, your perspective?
Yeah. I know we're focused on interest rate cuts and other metrics like that, but I can tell you that in the world we live here in Washington, for the rest of this year and for the first half of next year, there's tremendous concern about the tariff issue. What's going to happen in tariff trades. And those are metrics that are not even sort of on the radar necessarily. When we do the regular inside Washington analysis, we're looking at all these metrics that the government typically measures. But the question is there going to be a shock to the system at some point? Are we, is this going to be negotiated in a way that makes everyone comfortable, or is there going to come a point in time where this becomes the predominant economic issue? And we're not talking about the rate cuts anymore. We're talking about the impact on the global supply chain and the economy and all of that. And Aaron and I are talking to lots of folks every day who have some concern about the unpredictability of that.
Aaron, Jim, thank you both so much. Shout out to Nisa who watched. Thank you so much for joining the audience. Great question from Nisa. Is it really Charles Hoskinson as czar? David, Josh, I have no idea. And I don't know if either of you wants to answer that.
Look, I will say I've met Charles, and I know he's very passionate about the industry and thoughtful. I'm not aware of who the sort of shortlist is, but Charles certainly has the experience and the knowledge to be amongst those who are on the shortlist. I will say this. I do think we should have another one of these panels, because I have both number of follow-up questions for Aaron and Jim.
Oh, yeah.
I'm going to take one. I'm going to take one quick one with you, Aaron. Do we see the Republicans fall in line to approve these nominees when they're up? When they go through the Senate for confirmation, or do you think we'll see some splitting off on certain nominees that may not be as palatable to the whole party?
Sure. It's a great question. Well, look, first of all, I think you have to acknowledge that the Senate is a super important institution, and senators with their 6-year terms, they're a little bit insulated from, immediate political feedback like you might see in the House. And so senators are a little bit more willing to make principled choices, to vote no, even when the president has a mandate to some extent. Now, that said, I think that in most respects, senators also believe that the president has a right to appoint people that he wants to run the government. And they are supportive of President Trump and are going to do everything they can to confirm his nominees. There are some nominees that are going to face some headwinds, and they're going to have to answer important questions at their confirmation hearings. And that's why we have this process, so that senators get a chance to air their concerns, to hear the responses, to weigh these decisions and decide who to support. But by and large, I think there's going to be a lot of support for President Trump's nominees, even some of the controversial ones. Yeah. And counterintuitively, perhaps, with Matt Gaetz withdrawing as Attorney General, I actually think that makes it a little bit easier for President Trump to line up support, because a lot of senators kind of had to say that they didn't think that nominee was a particularly good idea. And, they want to be supportive of the president, but they drew a line there. And so with that having happened, I think they're going to be eager to embrace more of his nominees because they want to be supportive of him. They want him to be able to set his administration up as he sees fit, because he won the election.
Aaron, Jim, thank you both so much. To David's point, thank you for being guests. As we often tell our guests, you're stuck with us. There will be future webinars and sessions. You have to join us. Josh, David, let's wrap it up. Thank you all so much for being a part of this. Thank you for everyone in the audience who joined. Josh, David, when Michael Saylor texts you both and says, hey, I'm raising $3 billion, I'm going to go buying crypto, what do you tell him?
I love that he has found a glitch in the system and has been able to monetize that for the benefit of his company.
Yep.
What I would say, though, is that what the stock is trading at versus what the value of the Bitcoin that the company has on its balance sheet, there is a big divide between the two. And so one of the things I'll want to see over time is, are people willing to pay the delta or that premium? Mm-hmm. Or as more companies and individuals have different choices on how they want to get exposure to crypto, are they going to stay with MicroStrategy? Are they going to go to another company that copies that strategy? Or are they going to go to, have ETFs or purchase those instruments? So first of all, I applaud him and the brave, he's been brave and really out there as a, speaker for the industry. And I really respect that. But I do wonder, if this continues as other people get more options to have Bitcoin exposure in their portfolios.
The answer is you tell him to buy $4 billion. David, thank you so much. Appreciate it. Josh, bring us home. What are you going to be focusing on the next several days? We've got a legal working group meeting on Monday that you chair with our co-chairs, and I'm sure it's going to be busy. But what are you looking at from the compound in the vineyard in central New Jersey?
So, I mean, aside from the the pinball feeling of what's happening next and keeping track. I think one of the things I'll be working on is work, right? Because what we're seeing with this incredible news is incredible deal flow, right? And we're seeing interest picking up. Everything from M&A to new crypto ETFs to you name it, it's there. And so I think that that's going to be occupying, in fact, I know that's going to be occupying a lot of my time. But, catching up, thinking about who will be the next nominees and if I know them. And yeah. What about you, Ron?
Me, believe it or not, I will be doing likewise, keeping up on the news. Deal flow from the perspective of members of the WSBA or prospective members saying, hey, it looks like this crypto stuff is real. So it's always good to have that conversation. And more importantly, it looks like David has settled on Porterhouse. I tried to push him on Outback Steakhouse. That didn't work as well. And we are making plans, Josh, as both you and David know, for the remaining webinars that we have for the balance of the year and the all-important holiday party. But it's been an eventful year. It'll be a busy few weeks as well. Aaron, Jim, let me thank you both for being guests. Looking forward to having you join our meetings in the future. David, Josh, as always, it's a privilege, my dear friends. For everyone in the audience who joined, thank you so much for being here. If you have additional questions for our guests or for Josh or David, email us at info@wsba.co. We will be back, as long as I have enough caffeine in my system, we'll be back tomorrow for our regularly scheduled at 12 noon. I think, depending on where the Gulf Stream takes David, we'll leave it there, everyone. Thank you so much for joining us. Have a great rest of